fund world and Bogle and sort of connect him to the disintermediation movement that Bitcoin has. And I think he did a great job. But Bogle's problem with commodities was that it's only worth what someone will pay for it in the future. Whereas a stock is a company, and a company has people who go there every day, wake up, create value. That value turns into sales, which turns into cash flow, which turns into dividends to you. So even if the price does nothing and there's no speculation, you get paid. The money works for you. A bond, you get a interest rate, a coupon payment. So stocks and bonds, the money does work for you regardless of speculative return. He argued commodities are just pure speculative return. There is no underlying thing. Now, Bitcoiners will say, well, there are people creating value in Bitcoin. Fine. I'm not Bogle. I'm just telling you what he would say and what Vanguard thinks. And I think people inside Vanguard aren't happy about that decision. I think some might be, some might not. I personally think that it's a little nanny state-ish of them. They should just trust their own investors to make decisions. If you found Vanguard and you are a Vanguard person, because they don't pay intermediaries, so you had to find Vanguard. So if you found Vanguard, you're definitely into
sense for them where their CFO or their board is going to say, "Hey, we're missing out here." When he goes back to the business and the economics of running that business. So do you think it's a year or 2 years out that they make that switch?
Yeah, I would say 2 or 3 years. Now, I'm just saying they let them trade on the platform.
Okay.
I'm not saying they offer one. But Vanguard, sometimes if they can't find a good product for like as an advisor, they may do one themselves because they can do it cheaper. They may go, well, we can do this cheaper. We can use our mutual ownership structure to keep bringing. They may just do it themselves. But I would say that let's go in stages. First step is just letting it on the platform. And I do think they'll do that eventually. 2 years, I don't know. We'll see. At the rate Bitcoin ETFs are going, it seems to me that there is going to be some FOMO, and more if you have their main competitor BlackRock getting a hit product here, and they're seeing that this is like used as a legit portfolio allocation in the BlackRocks and the Fidelities of the world, and it's it's going to reduce Sharpe ratio, and there's some more adult-like, rationale as opposed to just when moon or whatever. If there's more of that, volume, and I get it. Some coiners are like, oh, you talk about the volume, but it doesn't necessarily mean the flows are the same. And I get that. Only a portion of volume converts into flows. But you have to understand that ETFs are trading vehicles, and volume is so important long term. And it's important for bigger fish. If you're an institution, say you're a hedge fund or a prop desk, a trading outfit, or a pension plan, and you want a little crypto Bitcoin exposure, you love the fact that you can put on $100 million trade or a $50 million trade, and no one will notice you. That's a big deal. If it doesn't trade a lot, I was like, I don't want to be half of the assets. I don't want to push the market price. I don't want a hedge fund to see a big fish coming in and try to game me. The more volume there is, the more anonymity these big fish can come in without anybody noticing them. They love that. And so they prioritize liquidity over everything else. So the volume is really good, even though it may get people hyped. Oh, it traded $1 billion. They think, oh, that's going to be $1 billion in assets. It doesn't quite work out like that. Right. Some of it will be inflows, but the volume is like if you were fishing for professional institutional traders and they were actual fish. Again, I'm like an analyst looking from the outside in. I'm a pundit, a critic. So I have the data, but I don't do this behind the office. But that's what issuers tell me happens.
Yeah, I'm very curious about the inner workings of that. And what do you think about Bitwise? They have released their wallet address where they're showing their Bitcoin holdings that are allocated to the ETF. Do you expect the other issuers to do something along those lines?
Nobody has yet. So I don't know. I think Bitwise is probably one of the most crypto-y native issuers. So it's on brand for them. Maybe ARK would do it. Because they're with 21 shares. Ophelia Snyder is very crypto native, and Kathy's a big fan. I could see them doing it. Maybe Valkyrie would do it. The bigger guys, no way. They just don't. That's just not them. They don't need to. They don't care.
Yeah.
They don't. Only way they do it is if if a Bitwise did it, and Bitwise started to get more flows than them. That would turn their head. I don't see that happening, so I don't see any reason for them to do it.
Mm. Yeah, that would definitely make sense. Like I'm sure BlackRock, they don't care, but like you said, if there was a competitive angle, where they were losing, that they would, capitulate and do the same thing. Now I remember you tweeted about this, and I saw the reports.
Crypto people, they're for their parents,
Mm,
but
yeah.
their parents have a trillion times more money than them. So I was actually looking at there's 157 trillion dollars in wealth in the United States. The boomers and the silver generation have like 102 trillion of the 157.
Mm,
So they have the vast majority of all the money. And so even if a tiny, tiny sliver of that is like, yeah, I heard my kids talking about it, or I don't want to kick myself in 10 years if this thing does go crazy, even if I don't understand it. That's a logical thought. And so I think that's what people underestimated was the buying the Bitcoin ETF as a way to have a little fun on top of your boring 60/40 and the potential future FOMO cure. People know themselves. They even though they love their 60/40 and their Vanguard, they also like sometimes see something happen and they're like they don't want to miss out. And they think they feel with Bitcoin, it I don't understand it, or I even think it's a scam, but I don't want to be like feeling like an asshole 20 years down the road when it's $1 million and I could have just put a little in my account. So I think like future FOMO cure is an underrated thing. And the other thing is the idea that there's way less pressure when you're.
that's been, even though it's volatile, has been giving great returns.
Yeah. So I think what you're bringing up is a really good point, which is someone, I forget who it was, an analyst who does podcasts like 2 years ago said, I just keep it simple. I view Bitcoin as a high growth tech stock.
Mm.
And I just want a piece of that stock. That's a good way to look at it. What I am not totally sold on is this idea that it's an alternative like gold, because to me it's a little too volatile to be a total alternative. It is a store of value, but it's too volatile in my opinion to be called an alternative. And it sometimes moves with the market. Like if everything went to hell tomorrow, like the stock market, I got to think Bitcoin's probably going to be like along with it. I don't see Bitcoin spiking up. Like if there's a huge inflation print, even though you think, okay, high inflation should be good for Bitcoin, I just think high inflation means Fed's going to raise rates, means the market tanks. And I think Bitcoin goes along with it because to me, for most people, Bitcoin is a speculative hot sauce outer layer of their portfolio. It isn't something they expect to hedge anything, and they shouldn't. But it's being sold a little bit by the fund companies as a sort of sharp ratio increaser, risk reducer. I'm not totally sold on that. I think over time it could be. But
Mm.
if you charted gold and Bitcoin, Bitcoin makes gold look like a money market fund. I mean, it's just